Hey everyone, this is the Trader Investor. In today's video, I'm going to go over Fibonacci retracements, how I use them. I mainly use Fibonacci retracements. I seldom use the extensions. And so let's just dive right into it and show you how I use it. And any market is the same way that I look at it. Doesn't matter the market, but today we'll use Russell 2000 futures as an example. I wanted to start with this example because I have no drawings in this particular one. Others I have other drawings that might be confusing, so we'll start with that. So first thing I do is looking from right to left, what is the most significant trend that I see and the most significant swing that I see? That's really where I start. And I see this big swing here that I see that, and I will mark it off as a weekly swing, except what happened was, you'll notice it in just a second here, I had marked it as do not show on the monthly for now, but let's bring it back. It won't matter because it's really the weekly that will help us guide our positioning. So but I start with the monthly. I start with the monthly and take a look at that. Okay, here's what I see on the monthly in the uptrend, but in the same time we have this recent downtrend. That's also important. So we have to look at both of those coming into the picture, because this uptrend, as long as it is staying, and let me remove the latest one so it becomes clear for you, an uptrend, as long as we did not break the 78.6% retracement, in my books, that is still an uptrend. It is just a momentary pullback. So we're above the 38.2 on the monthly. That's where we're staying. So that's why I'm drawing it this way. And then let's bring this back. The latest swing low, that's what we want to see. And in this one, we will hide the months again. The purpose of me hiding that one is so that you can clearly see, okay, we've already identified it. We're happy with the trend month on a monthly basis being an uptrend, but the current pullback, how is it doing and how far is it going to move before it reverses direction? Why is it important? Because again, that 78.6% retracement is my key value, my key area. As long as price stays below that, then I don't believe the pullback is terminated. So I want to see price pushing higher and higher and higher and clear that 78.6 to resume the uptrend of the monthly. For now, we're in this pullback. So from monthly, I go down to weekly. Has anything changed in the weekly? This is going to be a very, very important aspect of the trading, because what I do is I look at the latest swing, but I start the high point where we draw that monthly, right? So high to low before any pullback. Has a pullback closed inside the 38.2? If the answer is no, I just keep going down. I keep going down, and then here, very close to a bar on a weekly basis, closing inside the 38.2. This is close enough to where I say it has closed it, so I'm going to redraw a new set of Fibonacci retracements. Just to drill the point, if we look at the last one we just drew, you see on a daily basis, we have closed above the 38.2. We've closed above it a few days, and at the 50% it reversed. So that's why I'm confident to say, okay, this is closed, so I'll move to the new one. So what do I do with the new one? I remove this one completely and I start a new swing. We're still in the downswing, so from high to low, I think this is the lowest point, high to low, and these two are about the same, so it doesn't matter which one you use. Have we closed above the 38.2? Yes, we have here, but I don't have any new swing low, so I just keep this intact to see, okay, are we going to reverse the 78.6 and head back up, or are we getting any rejection here at these levels? We'll have yet to see. This is the one that is extended further to the left is our long-term monthly Fibonacci. So don't get those confused between the monthly and the weekly. The monthly is in an uptrend, the weekly is in a momentary downtrend. So as we look at this weekly downtrend, then we can come to the daily. And again, we keep narrowing down that push to the downside. We keep narrowing it down. So what do I mean by keep narrowing it down? Then we can grab this and say, okay, when we got here, did we close above 38? No. So we kept going down. We didn't close above 38. Here we closed above 38 right there. Right? So this on a daily now I can say, okay, I can add a new daily fib where I will take this latest swing high to low. Have we closed above 38 multiple times? I'm done with that one. I'm just showing you how I trade, how I look at these exercises. Again, this latest swing closed it, so we don't need it. And this is the last swing high low while we are moving to the upside, and that has reversed the 78.6 retracement, so that is useless to me now. So now the latest thing that I see is this swing low to swing high. Now since we're on a daily, I'll switch it to a daily fib, and here is what I see. Now the color coding makes it easier for me. These ones I know are on the monthly, the weekly. That's what we see here. And this is a shorter term back in the trend of the monthly. Back in that trend, we are at that 23.6% retracement. So this recent uptrend, we pull back to that close to 38.2, but then we're starting to head up. So this is the latest that I see now when I look at the daily, right? I'm not done yet, right? I'm looking at the daily. This is what I see. Then I go to the hourly. This is what I see on the hourly. So here's that swing low to high on the daily, but now I want to adjust this daily. So if we start from that low to high, I will zoom out so you can clearly see what I'm doing here. So when you go from this low to this high, we did not close above 38.2. To this high, we did not close above 38.2. To this high, we came down, did a lot of testing but we did not close above 38, below 38.2. So you keep moving, and I think this is where we are. We are right here. So this is where we are. Still, we're still above, as you can see, we're still above that 38.2. So this is still intact. Now, in the pullback, now the latest pullback, where are we in that latest pullback? So when you look from high to low, if you do intraday, we closed above 38.2. I'm doing this multiple times on purpose so that you can understand at what point do I redraw. So we closed above, so then I move it to a new location. And here, not only did we clear the 38, we cleared the 78.6. So this is no longer valid. What is valid now is within the rally. So if we see nothing below 38, this one very, very close to say, you can say it's close below, you can take it close enough. If I'm on a daily, if it's close enough, then I will definitely switch it. Once I'm on the hourly, for me, hourly is the lowest time frame. When it's very close like this, I might ignore it, right? It's now you can judge here. It's very subjective. You can say I will keep it or I don't keep it. Either way, it's fine. So now we know on the daily basis, we're above 38. We're above 23.6 on that daily basis. On the hourly basis, here's where we are. Now we've pulled back to 50. So this pullback is shallow. This pullback gets negated as a pullback and it becomes a reversal back to the downside if we clear the 78.6. But for now, we're still marching to the upside and we're staying above the 78.6. Actually, in this case, we're staying above 50%. So we're going to keep marching to the upside. So this is my lowest time frame. Now, if you were going to do a lower time frame, and let's say you want to go down to the 15 minutes time frame, if you want to go down to that 15 minutes, then you see this close below that 38.2, right? Again, this big wick you see here on the hourly, it hasn't closed below by much, but when you go to 15 minutes, this is where you see it. So if you're doing a 15 minutes trade, then you can say, okay, that was done, so I'm definitely moving my swing to a new location. Even then, it's this one here, the 38.2 was cleared, so you have a new location again, a new location. Now this new location, 38.2, is cleared. We did not go below the 78.6, so this held. So now you have a new high and a new higher low and higher high. And now this, if you're on the 15 minutes time frame, this is what you are looking at. I don't trade the 15 minutes time frame, so for me, I stop at the 1 hour. This is where I stop. So if I consider this close enough, I want to change it, then I would move it to this location. If I don't want to do that, because everything else didn't, as you move up, I don't see a close below 38, I don't close below 38, so I keep it to the highest level. So you can do this if you're doing on the hourly, and then as you move down to the lower time frame, just make sure you do that. I use TradingView, so one of the things I like about TradingView is I can set my levels at different colors, different line style, different widths, depending on the time frame. I like to trade the 1 hour for my entry. 5 times 1 hour is 5 hours, which is close enough to the daily. 5 times daily is a week, and 5 times weekly, close enough to a monthly. That's how I set up my charts. So 5 times, 5 times, 5 times, right? 3 of those 5 times you want to see, because the bigger time frame is your main trend, and then as the time frames get lower and lower is where you will see pullbacks, continuation to that bigger time frame trend, unless that bigger time frame gets broken. So anyway, this lesson is really on Fibonacci retracement. So this is how I'm looking at it. I start with the monthly, weekly, daily, 1 hour, and I've shown you now how you can go lower as well. But the main thing in my style of trading is once I draw high to low or low to high, whichever direction it's going, once I draw that and price closes below the 38.2, I redraw that position when price reverses back. right? So same thing happens when you're drawing high to low. Above 38.2, this is breached, but we know we're still going to the downside because the 78.6 has not been breached. So what does that mean? I redraw it to the new low from the new lower high. Again, this is breached, but we know it's not breached to the upside. There's no reversal. It's a continuation to the downside. You get this rejection at 78.6. You get this, and then you redraw again. You move your lows to lower low, your highs to lower high. Here we closed above the 38.2, so I know it's time to redraw, so I redraw to this latest one. Above 78.6, this drawing is done, right? I don't draw it to continue to the downside. Now I'm drawing to the reverse side. I'm drawing from here up. I just keep moving up until 38.2 is breached. This is what I keep doing. And if you look at the latest, right, if you have said, hey, this is close enough, I'm redrawing here. Now I stop here because that's what I see right now. I don't see anything further. Either we get a new push up, and price continues to do that, or we get a pullback, right, and then we get a new push up. Until one of these conditions happen, this is where my drawing is. If I get a new higher, I just keep moving it. If I get a new low below the 38.2, then I move my latest swing in this direction. I just keep moving it until I see what I like. If you have any questions, feel free to put it in the chat. And if you want another video, more explanation, anything specific on this fib retracement, let me know. I'm happy to do it. But this is how I use fib retracement. Until 38.2 is breached on a close basis on the hourly, I have no redrawing to do. The 78.6 is breached, then my drawing reverses. Now I go to the other side. All right, everyone, take care for now, and I'll see you in the next video.